Hi guys, welcome to Trade for Learning. As we discussed in the previous video, that was actually my first video regarding the option trading as a business. And the basic video where I uploaded on Trade for Learning, you can watch and come back to this video. So this video is basically like as I discussed in the previous video that I told you, like I have started tracking these options trading strategies in my Excel sheets. Is something like a paper trading before investing your hard-earned money. So here you'll not lose any money, but you will be familiar with this method, progress, how it goes, and your psychology, how it reacts, and the progress of trading in options when it comes to a normal day trading. What is the difference, how it reacts, and what is the probability? Because usually the trading is a 50-50 chance, but when it comes to options trading, especially the option writing, it's not exactly the 50-50 chance. It's like most probably like 80 to 20%. That is the difference. So 80% you'll gain, 20% you'll lose. This is what I'm telling when it comes to options writing, in the sense options selling, not like options buying. Options buying is a premium buying for a lesser cheaper price. So as I told you, like we need a minimum investment of 2 lakh. I'm telling this clearly, like this is just like a paper trading, just assumption, so that whenever buying or selling any call or put options, just remember that this is your limit, that you should not buy or sell more than these quantities. So that's what I'm telling. So most probably we just is just for assumption. So using this perspective that we have like 2 lakh capital, we'll progress. That's what I'm telling. This process I have started in July 2018, but I couldn't able to progress much because in the time still my day trading eagerness, day trading enthusiastic was still going on. So what I thought, like let's try uh, do some more trading in intraday and then try. That's what my assumption. So I started doing this intraday trading, and in between I used to do this option trading tracking. So that was actually didn't work out well. But again, when it comes to the October and the November, so I started focusing on more about this options trading regularly as a Banknifty options selling weekly, as well as like day trading on expiry day. These things what I tracked. So let's go through this video, first options trading video, so where you'll know how this how I started and what is the progress. And then let's move on to the next video that I'm going to publish now. So here, if you know that Google, it will provide this Google Sheets where you can track this with the proper formulas, all those things, that will be easy for you to track and see that how it progress. So I started tracking this Google Sheets like trading, and it was like almost it's been for me almost like 3 to 4 months, but intensively I was tracking from this November. So you could see this Excel sheet. If it's, I'll zoom it for a bit, you can see that there's a 23rd, 36, all those things I have done, August 13, and then November 15th. Actually, if you have to consider, then you have to consider from 15th November, from where I started doing regularly. And this is not only just like a weekly, it also includes trading on expiry day. So if you see these are the columns, the date when I start trading, and the signal Banknifty as of now I'm taking, and call, and the call price as I mentioned, like if it's a selling, then I'll mention negative, and call stop loss with the 80% calculation, that in formula, Excel sheet formula, and puts for, and call on exit, this is based on the stop loss, or maybe that the exact price I existed. It will also be in negative if in case if it's a option sell, if it's in positive number, if it's an option buy. So put exist, put options, collected, all those things I have calculated the formulas, and then lots. If in case only I'm dealing with the put or call, then I will have like only the values in the call columns or put columns, and then have some strategic formulas that it's easy for me to select and design a what you call proper structure report that will be useful for me, that it like depends on holdings or intraday what I did and what is existing, and some comments that started tracking. So if you see here, first 23rd July I traded with this 2 lakh capital, and the time still it was like a 40 Banknifty lot was a 40, not like 20, that 40 now. So if you see here that in the beginning stage I started with this 55. What I did, call option 27,200 I sold for 55 rupees, and then again a put option that was 26,500 I sold, which was cost around 40 rupees, and I was expecting huge profit. But what happened, it was a big premium, it means like it's near to expiry, and if there is a probability of like getting hit by this strike price. So I exited with a stop loss, and totally I lost like 44 points in a call, and I gained collected with a 39 points. Totally this is what actually happened, and ultimately I lost almost like a 162 points and to 80 into 80. So that was make me lose 1,162 rupees, not much. So similar way I started tracking, but this time next time onwards what I have done, I took some premium which is like around 29 rupees or 30 rupees, which is actually far. It was like a the expiry, if it comes to expiry day, the lot size or strike price that what I picked was like around 500 or 600 points far from existing current market trend price. It may be like a 500 for call and 500 minus for put. That's what I tried. So in that case I started gaining the profit. It means like it didn't reach anywhere in the market. So most of the time if you sell 500 to 600 points above below, so you are in a safer side that your options price will not strike that uh, yeah, the whatever the strike price that you have selected. So I have sold this is what happened. So till 23rd July, August, you can ignore that because it was not consistent, and then November I started properly tracking. November 15th I did that. See here, one lot I sold for 60 rupees call and 52 rupees put. So what happened, I collected both the premium. Actually this was actually, it was a critical because it was a huge premium. It means like it's around exactly 500 points far, but still I was end up with a profit because it was between this strike when it got expired. So I found like 4,580 rupees for 2 lakh capital. So similar thing I tried in the same 22nd November. So what happened in that time, 47 and then 55 put, 47 call I sold. But what happened, it got exit with a stop loss at put side because market dropped drastically. So put size I collected all the premium, but call size it was like a loss of like 95 points. So totally I lost around 1,920 rupees. So I added the comments like what happened, all those things. But same day what I have done, so imagine that uh, you have lost. So but still in the day expiry day, 29th day, what you can do, 29th is actually expiry day, so that time I exited. So 20, you can see once you exit from the strategy, so one side anyway it was 0.05 paisa, another side it was a last stop loss hit, so still you have a capital. What you can do is the expiry day you can go with the trading in same day. So but the premium is very far, so if you take like 500 or 600 point far, uh, that time what you can do, uh, you can expect the far premium which cost around 6 rupees or 5 rupees, something like that, 9 rupees, something like that. If you see here both side call and put, and in that time most of the brokerage they will provide like 3 to 4 times what you call brokerage margin. So that's what you can use and you can trade, and then you will end up with this type of what you call lots collections like 6.1, 5.3, something like that. So and also margin you use, so loss size will be like 160, 160. So totally you will collect some premium that is called 900 and some thousand, something like that. If you see here around some 1,000 in the expiry date itself. That's how we can manage if you have a loss of around like 1,200. And third, again I have opted for this call put options that was like 34 rupees and 33 rupees, and by unfortunately I went up with the stop loss the 60 point, and it was a both side call and put, it's like a hedging, and I end up with like 1,200 loss. But same day I did the trading for put and call options, and it was 1,400 480. That's what I collected. And then another options I have done, that was like a what I have done on that day, 26,000 I sold, and it's become around 160 quantities, means like a margin of 3 times. And then I saw that it was started increasing and it's become 18 rupees 25 paisa. Again I sold the same thing, so both of them end up with like 0.05 paisa. So both side I collected the premium. That was a nice try. Next on the same day for the next expiry I brought even you see here option sell price and that was cost around 144. That I had an assumption like market will not go further this much, and stop loss was 205, and one 45 rupees option I brought, like that costs around 25 rupees, 100 rupees. Why I did this? Because just for hedging purpose. If in case if it goes too far and quickly, then at least I will not be in a big loss. This call will increase and it will give some profit that will balance your loss. So what happened? I started observing and I got to know that market will reverse and then expiry day. So then I sold this call for 9 rupees. So still I end up with a 45 minus 9, no, whatever that loss. So not 9 rupees, sorry, 14 rupees. So only 31 rupees loss. And I waited for the expiry day. Expiry day it didn't come below this strike price 25,600. It went up, so it ended up with some minus. I exited with a minus 5 rupees. I mean, it's like I didn't allow till 0.05 pesos, so I got all the premiums 109 points and minus 31 points. Totally I collected this many, like some 8,001,244, so around 7,000 something, 6,777 I collected. So this is just by paper trading, remember guys. And then again in the same 13th it got expired, so I collected all those money and I updated the sheets, and that same day I had money, so I did this option trading in intraday by with a margin of 3 times. I think op stocks will give 3 to 4 to 5 times, but I go with 3 times, 160 quantity. I sold 27,200 and 26,600 for 4 rupee 0.8 and 8.9 rupees. Both I collected margin, so around 120 quantity, 120 quantities, like 600 for 500, some amount I got it. This is how I expect. So now the last but not least, this 14th, I mean Friday, I sold the 29.49 at 27,500. It means it will not reach 27,500, and 29.6, it means 26,100 it will not reach below the 26,700. So that's what my assumption. I sold. So I'm waiting for the end of the day. I end up with this reducing of 4.35 points from call and 1.05 point from put, and still you have to wait for this whole week what will happen and how, if it's going against a variable exit with a margin, all those things I have to check. But we'll see how it means, how it goes and what will happen. We'll see that. So current price is actually, when I bought it was like a 26,800. It might move up, that's what my assumption. Because if you see this chart, 1 hour chart in trading, it was showing that nothing happened for past 2 days. It jumped here and it was roaming here on the there only. We don't know, it might go up or down. It is some type of doji candle. If you see one day, see this 2 days doji, like doji candle, don't know the pattern where it will go, but I sold here somewhere 25,600 somewhere here, and 27, and then 26,100 I sold, and then 27,500, 26,100. It means like, see here, 26,100. I can expect loss still here. If it goes below this, then there will be big loss for me. And again, same thing for above. We'll see that if the market goes inside these things, this range 27,500 and all those things, still I'm in a profit, and I still have one chance of trading on expiry day. We'll see that. I will update this Excel sheet and I'll share the video. Then we'll see that what is the progress. So as of now, this same strategy I tried, and I'm end up with this much profit, like 9.33% for a capital of 2 lakh. This is completely paper trading, and I want to enter into the real trading with the money once I succeed with this paper trading for a few months. So I will soon update the next video about this progress and how it reacts and what is my intraday strategies, all those things. So most of the time I will pick for this both the hedging strategy, sell call side and put side, and sometimes I'll do this only one side if I have more confidence, um, like maybe selling only put side or maybe selling on call side. But selling is the best strategy than buying, because buying will not have this provision of or help of time decay, but buying, selling has all this time decay as well as the value of options that will go down, but the margin is required more when it comes to buying. So if you think about selling and buying, this completely exactly how it works is, if you remember, as a car insurance. So car insurance company is those who selling the premium, and buyers is the people who buys the premium. So this is how actually the option trading works. So how those who selling is a person who knows how actually market reacts, and the always time decay will be favor of them. And those who buying, for them it's like those who selling for premium. How you'll buy, right? Like for example, you have a car, you'll buy a premium. So out of like 1 lakh, like maximum 100 people, they climb the premium, but and they'll get a good amount, but still the car insurance company will run smoothly with a profit. But remaining people, whatever they pay for 1 year, that their premium is gone, and those premium will be collected by the car insurance company. This is how actually it works. Sellers and buyers. Sellers is a premium seller, and buyers is a premium buyer. So seller will should have more money to handle these things, and buyer can have less money, but it's like a lottery. So lottery will execute once in a 100 times, and remaining 99 times will not succeed in the lottery. This is how actually it works. So the 99 times, the percent times, the premium seller will collect the money. That's what options writers say. And there is some concept called open interest. That concept I'll explain in the next video. So if you like this video, just follow, subscribe, comment, like, and click on the bell icon for the next new notifications about the videos. And I will update you same thing, and new videos and new strategies to earn the money after learning, not just by a trading. So I will update you in the next video what is the strategy and what is the execution of this strategy and how it reacts. Thank you guys. Bye bye.